So let's pray. Heavenly Father, Lord, we thank you. We thank you for ushering us into 2022. Thank you for all the blessings of 2021. Lord, we pray that we are good stewards over what you blessed us with, over our time, the talent, the skill that you give us. Lord, the temple, our bodies, and then the treasure, our finances, Lord. Let what we do be pleasing in your sight, Lord. I pray for anyone that is ill or anyone that is feeling bad, Lord. I pray over their mind, their heart, and their bodies, Lord. And I pray that we grow to be the people you'd have us to be. Let's be loving people, caring people, and sharing people. We say this prayer in the name of Jesus. Amen. All right, everybody. So, hey, you guys, state of the markets. I always enjoy us having this presentation where we sit down and we talk. So, hey, I'm going to kind of start walking through some slides with you, and then I'm going to kind of show you some information. We're going to kind of go over it. I may take a few breaks in between, and you, as you very well know, you can ask me questions on it and everything in that area as well. So here, let me just pull this up real quick. And all right, so first of all, Danette, can you let me know? You guys see the screen and everything, right?
Yes, we do.
Okay, perfect. Okay, guys, so we're gonna be walking through state of the market. So first of all, got to put up a little bit of formalities, 2022. So just a little bit of information here. So just that you guys understand that we're gonna be talking about certain things. As you see, there's some read through here is that a lot of we're giving out information, and we just want to make sure that you understand that we're doing this for informational purposes. So we're walking through this. All right. Okay. So now we can also, while we're talking, guys, I just ask that people not be distracted. In other words, if you were live, you guys already know. I tell you to silence your phones and everything like that, because you know that when I'm doing it live, you guys pick up your phone. We always answer and we talk together, so we can't do that. But at home, I just ask you guys just be focused, except for one thing. If you are folding laundry or doing laundry, we let that go, because I do that while I do things every now and then. So that's the only other distraction we have. So if you guys can just do that and give us this hour, just a time for us to work together at this time, that'd be great. All right. For new people, that was a joke about the just in case you guys don't know my sense of humor. All right. So also, we welcome questions. So if you have a question, just type in the chat that you have a question, or type part or some of the question in there, and then we will walk through those. And in doing that, okay. But also, first thing before I get into everything and everywhere, I also want to introduce you to our staff and everything in this area. So our concierge people, they're right here. Concierge, making sure everything is going well and everything. We have Shayna right over here. Shayna, you can wave her hand and so that people can see you, depending on how you're doing it. Also, we have Julianne in doing that. So many of you have spoken to Shayna and spoken to Julianne. And then also we have Crystal. Well, with the fresh braids, she done got her hair done. Okay, all right, Crystal. Okay, so Crystal also does that. Crystal serves in two roles. She also serves helping with Thompson Wealth Management, and then also at Faithful Central, and then also with the Community Development Corporation that we do. All right, and all the things we do in the community. And then last but not least, then also we have Danette, who is on. So she is the VP. So you also know Danette. She'll also be co-hosted with me. So any questions, again, type them in the chat. And then I think everybody, if you don't know me, I'm George Thompson. I'm I work here as well. So I help out from time to time. So and then questions. So if you have any questions like that, you guys, we're more than happy to do that. And just really want to, before I go through this, it's really about you being infirm, learning information, and also how things grow, and just learning about the market. So we're going to be walking through these. All right. So I just want to start and just kind of make sure I cover what we're going to be covering today. Talk about what we're going to be covering. So first of all, how the markets did in 2021. And then for people who've been on these before, that's everything. If you remember during 2020, we really talked about this quite a bit. And then I want to talk about what happened in 2021 and why. And then after that, then we're going to talk about where we're at right now. I think everybody knows we have some little issues with inflation, different things like that. So I want to talk about where we're at right now. Then I'm going to tell you about what people are kind of saying about 2022. But then I'm going to tell you how I feel about 2022, and then what's most important. And I'll say the end is that how we're managing your assets, or how we're managing your portfolio during these times. So I will talk a little bit about themes and everything like that. That makes sense, everybody? All right. If you guys, if that makes sense, just type yes in the chat, or we have to do something to get some interaction, because usually when you're in person, I can do that. So please, let's be interactive, and let's continue to talk. So first of all, everybody, as you guys remember, I'm going to kind of go old school before I put up these numbers. If you guys remember, do you guys remember 2020? Well, actually 2019, when the markets were just going up. The Dow Jones, say around 27,000, it was going up and everything. And then you remember when the pandemic started coming over to the United States in March of 2020. You remember how the markets just went down. And then you saw how we did we started doing weekly seminars, because there was a lot of panic selling going on. This will make sense later on. And then the markets came back up. It was kind of panic buying. Then we rolled into 2021, and we were still dealing with the pandemic, and there were a lot of questions around this. So this is what people thought is, first of all, the S&P 500 stands for the Standard & Poor's 500 largest companies. But by the way, there's about 7 companies that make up 40% of that return. So it's heavily weighted. So these are what all of the, I'm going to say the big guys, the different companies thought that they were going to, different firms thought they were going to do. So you see the average is going to be 4,117. You see the person who thought it was going to be the highest, JP Morgan thought the S&P was going to do 4,500. But as you see over here, the S&P went up to 4766.18, over a 26% rate of return on the S&P 500. So do you see how, like, when we're sitting there, everyone's trying to predict these things, very difficult to predict. And you see that's how how it went up. So now let's look at that. Now what I want to talk about is what drove that performance, like what made the S&P 500 go up like that. So I'm not necessarily going to walk through all of these with you, but as you'll see, these are different dates you saw. So then you see January 20th, and then I think you guys know what happened. I guess this might have been around January 6th. You see here, but that actually didn't have that much of an effect on it. But then you see here that has different things, and then you're seeing all these things. GDP, by the way, stands for gross domestic product. So that's what the country's doing. Like, you see how things are continuing to go up. Then do you see right here, Delta cases surge. So then you see how that affects the market. Then you see the Delta variant, then you see these surges. And then this is before, as you see, before Omicron starts coming into the markets later on, and then you see earnings. But has anybody noticed, what do you guys notice about this trend? It's up. So, but then you see here, these red lines, you see how things are happening that are negative as well. Sorry, going backwards. So you'll see this. These are different things that happen in the markets, and in them going up and them going down. So I want to jump in here real quick. So what you guys are seeing, you're seeing how the market is going up, but you're seeing how there's volatility. So if you remember, there's certain strategy you want to have when you're investing, like if you're putting in monthly, you guys see that the difference of this. Or if you're retiring, then how asset allocation may change, or there's just different things that we also may be doing to also bring that rate of return. But here, let's keep going. So I want to kind of walk through this. I know there's a few slides you got at the beginning, but I want to kind of walk through these so that we have these, and then we can kind of go through them. Then, do you guys see right here? This is the revenue growth. So stocks, what makes stocks what's supposed to make stocks go up is earnings. Like, the company has earnings. So if you look here in 2000, if you guys remember 2020, is that you saw how earnings were affected, as you see right here, when the pandemic first started. And then you see where that happened. So then a recession is 2 negative quarters. of two negative quarters of GDP. But anyway, this is showing growth. But then you see how things are growing now. Do you see how they're growing? These numbers are getting higher and higher and higher. So do you see what this is causing? When the revenue growth is growing, I'm going to get into later on what's causing this inflation is because companies are actually earning more money. But we're going to talk about inflation a little bit in a little bit later in a later slide. But you see, this is revenue growth. So you see these numbers are higher than they were before. And then you're also seeing GDP growth. And then you're also seeing here labor market. So that's another economic indicator. And then here we go, inflation. I'll get deeper in that later. And you guys understand what consumer sentiment is how people feel about the markets. And how they feel about spending, or are things gonna go up? Because when people think everything's fine, then they spend. If they don't, then they don't. And then there's housing. We'll talk about that as well a little bit later. And then I'm gonna talk about where we're at now. But first of all, before I go through that, Danette, do we have any questions that you see that are in the chat? Or I want to pause just for 1 second and see if there's any questions. So I want to talk about where we're at
right at the moment. We do not.
Cool. When I come back, I want to have a Q&A. You guys, I think everybody on here that's seen me do this before is I'm going to have a Q&A at the end, and then we'll have them. And then also I have some questions that were sent in to me that were asked, and I just want everybody to know I got my phone right. I got my phone right here. We're doing it when people always when we were email questions and things. When people were emailing me, asked me questions before, these are just questions that have been asked to me also for that and on our show. So there is a company that goes out and they do economic indicators. I'm sorry, and they say where people are going, and they're doing economic indicators, and they walk through these, and there's about 20 of them. So here I'm going to show these to you, and then have us have a look at them. But look at this: monetary policy, U.S. economic outlook. And then look at this, consumer sentiment. You guys see, and obviously everybody knows green is good, right? Yellow is yellow's kind of caution, and red is like not good, negative. So you guys see positive, neutral, negative. I think everyone's driven a car, right? So you guys know the green light means it's time to go. Neutral is supposed to mean you're supposed to look at the light and not floor it through it. And negative, and you guys see negative. You see on the left side. So this is February of 2020. So you see this? This is like right before we're getting ready to go into the pandemic, right? So it's February of 2020. So that's one. So we look at this. So everyone looks at the neighborhood. And then, by the way, all this geopolitical, on this political stuff, I'm gonna do my best today because I don't like getting all the getting emails or arguing about politics stuff. But it's always been red for quite some time. You know what I mean? From doing all this, it just is from. I think we're just in a very divisive time where I'm not saying whether it's Republican or Democrat, whichever side are on, people just that side. So it's kind of on there. So it's just that's the way it is. But I'm gonna leave that alone for a moment. Then you see November of 2020. So November of 2020, you understand we're in the midst of the pandemic and all the things that are going on in that time. So we're we're in the midst of that. So we see that, but you see here, monetary policy. For all those of you guys know, I'm kind of a fan of Jerome Powell. The Federal Reserve, that means the Federal Reserve has low interest rates. What's happening now? That interest rates are low. They're buying back bonds. They're doing everything. The U.S. government is printing money, as you guys know, printing trillions of dollars and giving it out and things like that. So then you're seeing, look, housing and mortgages, you can refinance. That's why mortgages and everything going higher. Interest rates positive. You're seeing this stuff. Look, corporate profit. If you guys remember, we had where we talked about corporate profits. So we talked about when I talked about investment portfolios. Hold on, I want to jump in here and then come right back. Do you guys remember when I talked about corporate profits? We went out, we had what's called pandemic stock. It's okay if you didn't get it. I'm gonna repeat it again. Pandemic stocks. You guys remember I had a portfolio where I sat with you guys every week. And I said, certain companies are gonna do better during a pandemic. Then they do it. They'll go in the pandemic and do well. And then after and then during the pandemic, and then afterwards, we'll see how they'll do. just giving you some examples and everything. You guys, again, you guys saw a little stammer morning, so I'm just giving examples. Guys, like some of the companies we talked about before, remember about Disney, or I'll give you an example, Netflix, right? Like before, people say, let's do Netflix and chill, right? But then those companies did well. And then we'll come back into that a little bit later about how they're doing now. But those are companies that would do well during a pandemic. So you're actually watching that come to fruition. So what you're seeing is in that area, corporate profits, that's what really, really kept the area also of large cap growth going. Okay. And the large cap growth companies, just examples would be an Apple, Google, Amazon type companies. All right. Large cap value or more dividend paying companies like that, like the Cloroxes, the Targets, the Costco's, things like that. All right. All right. Then, okay, because I'm not talking about politics because I'm not talking about that. All right. I'm sorry, there's lots to talk about with that, but I think everybody knows that area. And then look, inflation was under control. See that? November of 2020. So here, let's keep going. December. I mean, this is actually looking pretty good as well. If you look at this, and and just to look at this, December, out of 20 of these boxes, like 17 of them are positive. That's coming in. So you guys understand this? That's coming into 2022. So that's saying like, hey, that's like a good sign. Okay. But then it starts to change a little bit. So then this will show you a recession. But here, let me give it to you again. So, sorry, before I hit in here. So when we come into 2022, there's something that I always kind of do now, and I'm going to start doing this more. If you remember, I did this when we did the weekly ones. It's popular. It's called headwinds and tailwinds. So if you guys are flown on a plane, headwinds means it's something that's challenging, that's pushing. It's harder to push forward. So a plane has to use more fuel. Tailwinds are when it's pushing you and it's pushing you further. So headwinds are challenges. Tailwinds are kind of things that are helping push us forward. Those are good things. So here, I just want to touch on them. So we have with the so first of all, let's just talk about the pandemic. So you guys are seeing we're watching up front, like how all that's playing such a big role in everything that's going forward, and you're seeing, and unfortunately, all the people that have been either ill from it and also that have passed from it. So I mean, it's in the millions now. I believe we've surpassed over 5 million people worldwide, and in this, and this is the tough part. So if you look at right now, the Delta variant, which to me seemed kind of short, it seemed like we went straight into the Maricon virus from the variant from that. And the infection rates are very high with Omicron. It's very high, but the death rates are not as high. And that's because of the vaccines. Now the vaccines, I guess people are figuring that out, but the vaccines are not stopping people from getting the virus. It's not that they're able to live through it. Does that make sense? So the infection rates are high, but then also it's just they're going through it. And then also I'll do some more when I do our monthlies. I'll do more updates. If you remember when I did the weekly ones, I gave weekly statistics of cases and then deaths, and I did that. But the overall theme is that does slow down our economy, because when we open things up, it makes things a lot easier. For example, that's one of the reasons why we have inflation, is because of that. It's supply and demand. So does everybody understand what inflation is? So what happens is what inflation is, quite simply, is this. Inflation is a lot of dollars, right? That means money supply, a lot of dollars, and then smaller supply. So we printed a lot of money and people have money. But then there's a supply issue with products, right? There's less products, right? Okay, nobody remembers, okay? So if you guys remember when the pandemic first hit, You went into Target, Costco, and you couldn't get no toilet. What couldn't you get? You couldn't get no toilet paper. You couldn't get no paper towel. You just couldn't get certain goods. Okay. So then that created a scarcity. Then people were trying to buy it. Then they just raised the price. Okay. So that's called inflating something. So it's inflating the price. Okay. So now just a quick shout out in the chat section. Can everybody write down what you guys think has gone up in price? And I'll start. Okay. I'm holding up number one because I'm gonna start with number three. Okay. Are you guys watching the cost? Do you guys know that Costco raised their prices? Costco raised their prices. I mean, you guys are saying Costco, $1.65 Costco raised their price. I mean, I was shocked. So you guys, Costco tied. One second, let me see how good I am at this. Costco, $32.99. This was, I took this last week. This was what? Okay, I'm gonna get out a prize. Someone that, what was the price of this like a few months ago or for the last couple of years? Does anybody know what the price is? Type it in the chat, and let's see how good you guys do with this. What you guys think this price was? All right, but also because I'm gonna send this out. I'm doing this. Who said? Oh, no. Okay, now Julianne. All right. Julianne is right. It's $28.99. Okay, but now who here thinks Julianne can't win? Because what is that on America's Funniest Home Videos? They say employees can't win the prizes and everything. All right. So anyway, no, so it was 28, and it's 32 now. And by the way, Costco. And then you guys type in the chat if she can still win. If you guys still want her to win, or we'll see. We'll see at the end. Okay. But you guys, I know you guys may say, hey, hey, that's not a big deal. But you guys see, Costco doesn't actually want to make a whole lot of money on there. They want to do the cheapest prices. They treat their employees well. They want to have the best prices. And then third, they make their money on membership, on people, on just having memberships and doing that. So they're raising, and then you guys already know. So I'll just jump to number one. Gas prices are high. Okay, if you guys know, to people that are tuning in from other states, in California, you guys type in what you guys think gas is. Everyone type in what you think gas is for places you went. Because we talk to people, gas is let's the California people go ahead and type it in, and then before Julianne, before you type in what it is at Costco, just type it in the places you drive by. Good, $4.75. Okay, we're seeing that. It's $5, $4.20. $5.30, okay, and then you guys, Bay Area is even higher than this, $5.19, okay. I know then it must be in the fours. I'm going to see what it is at Costco, but in North Carolina, it's something like it's in the threes, 3, 20, 50. Texas, other states, because California has taxes on it. But we want to understand is that that's inflation, and you got to understand inflation is an issue. And that's what makes the Federal Reserve now. That's one of the reasons why they're going to raise interest rates. They say they are, and they may. They said they may raise them up to 4 times this year. And doing that, a lot of people on the street, a lot of things are saying so. And this may happen as soon as March, somewhere between March and June. So does everybody understand what? So then someone says, what effect does that have on me? Okay, well, the effect that has on you is if they raise interest rates, then what happens to all the people that are refinancing their homes? Now it makes it more expensive to do that. So you got to understand what an interest rate is. An interest rate is the cost of money, and the Federal Reserve actually sets those. Because I'll tell you, the Federal Reserve has 3 powers that are, the government has 3 powers that are they're kind of up there. All 3 of these are number one. Number one is they can print money. I'm sure you guys have printers in your house, but printing money, that's amazing. Number 2 thing they do is they control the money supply. In other words, like they bring bonds back in, they can buy them, sell them. Like they can control how much money is out there in supply. And the third is obviously is what by them buying and selling. And the third is also interest rates, raising and lowering interest rates, because that tells you how much you can have. If they change interest rates, that changes mortgages, that changes car interest, that changes credit card, and it makes it more expensive to borrow. That makes sense? Okay, cool. Also want to check, make sure everybody's muted. All right. And then also the Fed policy now, they're saying they're going to stop. They're going to reduce their balance sheet. They're going to start making these changes and doing it. Also, which is going to also is that I'm going to say China, but also other countries their economies aren't growing fast and spending and doing things. So then as that's happening, that also can affect, because we don't just invest in US stocks, we also invest internationally. And a lot of the large US companies that we invest in have international stakes, stakes and stuff, and other countries, like in other words, like about Coca-Cola, they sell Coca-Cola overseas. If people are drinking or they're doing less, then that's less they'll do. Then also, you guys, elections coming back around and everything like that. So then we'll see how that happens. And then as far as geopolitical and all the things that are happening, I think you guys are already seeing all the things that are happening in the news, or if you guys are not watching, just tensions, the border, Russia, China, Taiwan, and then so that affects things in Europe also as far as their energy supply and stuff like that, and just different things. So these tensions may happen overseas, but they actually have an effect on your portfolio, and also have an effect on the U.S. All right, those are headwinds. These are things we're thinking about and will have an effect, and also may have an effect on your portfolio. Now, tailwinds. Someone say tailwinds. Tailwinds. Okay, all right, you guys. Even when everybody says everything is good, everything is going bad. Hey, by the way, the reason why prices are going up and everything is because there's economic expansion, meaning that there are companies doing better than they were doing before. There are people actually making more money than they were making before. And you guys are seeing all these things. I'm going to go back to I'm going to go back to headwind turn into a tailwind. So one of the things here, and for everybody here that's in California, they have down here at the docks, like down here at Long Beach, at the ports and everything, they're having a problem unloading all the stuff that they need to unload because of the pandemic, having enough people to come to work and doing this. And there's a massive. Do you guys know this? Just say yes if you do. And is that there's a shortage of truck drivers. There's a lot of people that want to be in the trucking business. And from this, a lot of things have happened in this pandemic where people have said they've retired and don't want to come back to work. Or I want to work from part-time, or I just want to work from home. Now, you guys, don't type your name in the chat if that's you, because we've already taken an unofficial poll, but that's about 30, that's a high number. And by the way, for you that are doing that or thinking about that, you are not alone. So then that makes this economic expansion, like unemployment is very low. Like they look at how many jobs are open. There are more people, the jobs, like in other words, that there are people that their jobs are looking for more people. Like everywhere you go, like don't you see now they're hiring, like it says hiring in different things. And if you look at one other positive to this, when I say what they're looking is, they're saying they're looking for more injured. They're looking for more people in specialized areas, from trucking all the way up. If it's just that people want to do that. So now we saw inflation. Here, let me talk about this and I'll bring it back up, so you guys understand this. We saw inflation, right? Where prices rose on what? Products. No, you guys, that's what I'm saying. It rose on products, like products cost more. Julianne told you what the tide was, now it's higher, right? So we showed what it went up in price. So what's gonna happen though also is we have to look at how the prices went up. That's one, but there hasn't been that much inflation in labor. Like in other words, like how much stuff costs that someone's doing for labor. Does that make sense, everybody? So there's something called pent-up demand. Follow me. Pent-up demand, meaning like that later on people want to travel, people want to do more, but they can't because of the pandemic. They're going to want to do more, right? But what's really going to happen? So then what happens is when they do that, that's going to make the economy expand. But they're slowing things down by raising interest rates. So what that might lend it, now there's so many people that they need to work, they may have to inflate wages. Does everybody understand that? That to pay people more to do the job that they wouldn't do before, because now someone says, I'm not gonna, I don't know, hopefully you guys don't watch all this stuff on YouTube, but I don't want to come and work at this, I won't work at a fast food place and deal with all this and not be paid more. They're gonna pay people more. But then when they pay people more, that raises prices. Everybody understand that? But what they're saying, and then I guess economics is they're saying, in economics is that if everyone's paid more, they have more money to spend. Does everybody understand that? For the new people, I was able to ask Janet Yellen and Ben Bernanke a question when I was financial advisor of the year, and I asked them how we would grow out of this economy. One of the questions, I just asked a question, like there was a question that was brought up about how they're going to grow out the economy at one of our financial advisors, one of our meetings. And they said, well, what happens is we grow our way out of it. And what happens is people make more money, our economy expands to where we can run a balanced budget. But that may be a factor. Does everybody understand that? So I'm gonna translate it one more time and then we're gonna go. Is products have gone up. But if we fix the demand, the supply chain issues, then products can go down or be normalized, but then at some point, wages may go up. And then when that happens, that can help people make more and do more. Does that make sense? All right, cool. And also one last thing about this. I do class where I talk to people and I show you to find out what level you're at, struggling and sinking, steady, solid, surplus, like what level you're at. So it's gonna help people get to the next level. If you look at this economy right now, home value has risen, interest rates are low, so the cost of it wasn't as high for all the people that refinanced. And then people who put money in a 401k can still grow. It's like it can keep going and moving. Next, if the monetary policy, if they keep a tight wrap on this and run it really well, that will help us. In other words, like what they're doing now, manage it really, really well. I think through the pandemic, I'm raising my hand, and anybody want to argue with me, we have to be at the end and doing it, that led us through this pandemic. I would like to say the Federal Reserve ran this like an orchestra conductor. I couldn't think of what he could have done differently, better. His name's Jerome Powell. Corporate profits, they're you guys, I used to sit there and tell you how much Apple and them were closed making, hitting record numbers. And Amazon, now Amazon trucks I saw two of them on one street the other day. And then a healthy consumer. That's what I just spoke about. You understand what a healthy consumer is? You. How are you doing financially? Like in other words, you have a home. It's your mortgage is at a good rate. Your interest rate is at a good rate. You have a car, it's paid up, like different things. It's not like when people are healthy, they spend more financially. All right. So those are headwinds, tailwinds. All right. And then, hey, I'll answer any questions I have at the end. And then this is just another chart, just showing you what I said earlier. So, and then I'm back into lesson 4. I already kind of covered this earlier when I was speaking, just about valuations. You guys, valuation means that there's something called a PE ratio, that stands for price to earnings ratio, is that large cap growth, or these growth companies, their valuations have just gotten so high. But then you look at what's happening this year about how they've gone down a little bit. So then it gives us kind of an opportunity. So this is just kind of showing you how the valuations and how much the valuation is trending up. You know what I mean? Like, so as you see right here, these are the average. 25-year average is 16. So you actually see up here when it's at 21, you see that it's trading above. So it's a higher valuation for that. All right. Now let's look at what people are saying for 2022. Spoke a little bit about this, but I want to say this is when we're looking at this and everything, and then I'm going to take it down. So I'll show it to you. Is that if you look at a person and the person, then I'm going to look at a country. Is when you look at assets, liability, and net worth, is how are people doing? You know what I'm saying? Like we have to sit back. That's something that we look at if you're a client. Is that, in other words, how is your net worth increased? How are your assets? You understand what an asset is? That's your home, your investments, things like that. And what are your liabilities? Liabilities, your debts. Real simply, guys, financial planning is you want to reduce your liabilities and increase your assets. And also, we also want to do that as a country and in doing that as well. So that was just that. That was a slide, but I want to make sure I hit my last one. And then we're showing year over price increases. You saw that. Then I just want to show you one more, and I think I'm good. I want to show you one more. So we're going into 2022. And what we're seeing is how the market has gone down. It's been a pullback you've seen this year. And if you really look at it, if you look at October through December, you saw how the markets went up. I'll give you exact numbers on the sheet, but then you see how things are pulling back right now. This is, in my humble opinion, a time when you're seeing where picking, really good companies is still really important, and having a managed portfolio and keeping with the same themes that we've kept over time, I think will pay dividends now. For example, there's certain things I've said for over 20 years that just don't go out of style. One, buying good companies. I don't think that ever really goes out of style. Then, do you remember we said we wanted to be able to invest a little differently a couple of years ago in healthcare. Remember where I talked about testing? Remember there are companies that do testing. Remember that'd be like the Abbott Labs thing. Then there were treatment. Companies that dealt in the area of treatment. You remember at the time it was Gilead Sciences, Remdesivir, and everything. By the way, I'm just using these names so you hear about them. I'm not telling you to buy them or sell, because these are strategies that we've done. And I'm going to tell you about going forward. Then also Regeneron, you heard those. And then there was the cure, right? Testing, treatment, cure. Cure was the different, was all the companies, and you guys already know all these names, from Moderna to Biotechnic to Pfizer to Johnson & Johnson. I'm sorry to mention a swear word, AstraZeneca. I shouldn't say a swear word. AstraZeneca, different things like this. But you guys understand that these variants come out. There's other companies. Merck came out with something. They're working on certain things. There's these companies that are working on them in the healthcare area. So trying to pick which one is going to be very difficult. But us having fund managers or having them work on them, and fund managers and owning them, I think those are good. Those are good possibilities. And then also having a long-term outlook, I think is good. Also, we have to have a bond. Now you're going to see our bond strategy change. Not change, but you understand that you're going to see it come into play more, because just so you guys know real quick, when they raise interest rates, it lowers bond yields. So when interest rates go up, your bonds are not worth as much. It's called an inverse relationship. I did this on my hand because when I first started in the financial industry, my branch manager said, he pulled out a teeter-totter and he showed me how it worked with bonds and that. I don't know why I thought he was a genius. Then after a while, I found everybody did that. But anyway, they have an inverse relationship, so that helps in that area of being able to do that. So we have to look at some different alternatives, actually, to just straight bonds and doing that. So, I mean, there's where we're going to buy them, but there's a very specific strategy that we employ, and we've been doing that for quite some time. So I think that that will be good. All right. So now, right now, I'm going to stop, pause, answer some questions, and then I just want to talk to everybody about next steps. Okay. So, Danette,
We
can you
do have
come
a
back?
couple. Hi, everybody. So Mac from way back asked you,
Emac
said it's
from way back.
Eric McCaskill. He said it's
Oh,
tough to predict. I'm reading the screen. He says it's tough to predict, but how many times, and I think you answered this earlier, if you could dig in a little deeper, how many times will Fed raise interest rates and what impact will it have on the real estate market?
okay. All right. Emac from way
From
back.
way back.
So first of all, there's this gentleman, I think I've mentioned his name a few times. His name is Jerome Powell. We do not know how many times the Federal Reserve will. So what he does, he gets up and he talks. And by the way, it's so interesting is people try to follow these guys and try to figure out something. I'm gonna mention some names. Just type in the chat. Yes, you've heard of this. Have you ever heard of a person? His name was Alan Greenspan. He was like the Federal Reserve. Like they would watch what briefcase he was carrying to see if it was big or if it was small, to see if there was like if it was small, they say, "Oh, they aren't gonna do nothing today." I'm like, y'all, that's kind of petty now. And then well, ladies, I know it's like I used to tell, I used to ask, anybody heard the name Janet Yellen? Janet Yellen. So I used to, when she was during the Obama administration. There's an advantage to say, who's the most powerful woman in the world? And everybody always would say Michelle Obama. And I was like, well, not actually. There's this other woman. Her name is Janet Yellen. Yeah, she's decide how much is in your bank account right now, and how much your car payment is, a mortgage. So in doing that, so the Federal Reserve, it's now when we say on the street, like there's different indicators that they may raise 4 times this year. But this is the thing, when they say that, it affects the market, but then he may do it and he may not. He watches the market and makes those decisions. That's one, Eric, the question you first asked, I'm sorry, not Eric, EMAC. The first question you asked was how many times, but that's only half the challenge. The other is how much. They could raise it once, 1%, but that's very dramatic. Or they may raise it, you understand, 4 times, 25 basis points. So everybody understand what a basis point is. It takes 100 basis points to equal 1%. So that's like 0.25, okay? So we will see. Now, how it affects now, before Danette jumps in here and tries and answers the question, she knows this is EMAC, you already know her from way back, that she works in real estate. So you guys, and I'm gonna do a little bonus at the very end. I'm gonna talk to you a little bit about real estate and things you do, but you should fly in any weather. Now it affects other people, but then that just makes how you're going to do it. Because if you're buying real estate in California, like, you know, there's used to be this thing where someone goes, George, if you get a deal, call me. If you've done it, I get a deal. I'm like, get a deal? Everyone, there are no deals. You have to make a deal. The house I'm sitting in right now, I don't think it was the world's greatest deal when I got it, but I made it into a good deal. So that's, and one area is the financing. But then the other areas you got to learn, you got to buy it in a good area, or you got to fix it up, or you got to do something. Like I'll show you one at the end. In other words, like you want to buy the ugliest, I'm gonna say it 3 times, ugliest, Elaine, say ugliest house you can get in the nicest neighborhood and the smallest one. And then you want to change it into the nicest, biggest, and do that. That's how you get value. That's a good question. All right. Danette?
Well, we don't have any other questions. There's just comments. When you were there, one of the great comments was from Sherry Lynn. She talked about it because this will resonate with you very well. She said her beloved's construction projects cost have soared. A piece of lumber that cost about $4 pre-pandemic is now about $15. So
Who said that? Who said that?
Sherry
Lynn.
Lynn.
Shirley, I went into Home Depot to buy some lights. And you know how you get a dozen of them, you have them in a box, and they were $20. I walked into that Home Depot right up the street. And when I walked into that Home Depot, I said, $19.95. I said, wow, they ain't raised a penny. I grabbed the box, went home. Charlene, I opened that box and there were 6 lights in there, Charlene. You know, I'm still mad about that, right? They had like 20 lights in there before, and now they gave me 6. You know, I went back in there and talked to the people at checkout. I said, y'all should have told me there's only 6 lights, because you know 8 lights in here ain't working. That's called inflation, y'all. That was crazy. You know when they did that, I'm like, yo, I'm surprised. Then when I got ready to go into it with everybody, they're like, I was surprised. They were surprised that they caught me off guard with that. Like they're like, no, first it was 12, then we went down to 10, then we went to 8, now we had 6. I said, okay, so next month I'm gonna get 2 lights for $20, I guess. They're gonna be $10 a piece. But you guys, this is a reality. So this is a supply chain issue in the United States. So it's cheaper to buy. I think everybody knows all this stuff, right? About import and export. It's cheaper to have stuff made in other countries. They're also, the other countries are dealing with the pandemic the same way we are. So what happens in some countries, they just shut down everything. So you remember when they shut down chip, they shut down different things and we can't get them. Then it takes a while. For example, I'm doing renovations on a property, and we ordered a door in November, and I'm still waiting on it. You understand that? So Charlene, maybe me, you, and a few others. I don't know, Elaine, I think you with it. Michelle, maybe we could swim out there, pull it off the ship, and maybe we could just then go like this. Can you do that? You guys can do that, and then bring the door in, and then just come back. Because you understand now they're in the ports, and now things are getting on the trains, stuff is getting stolen, stuff like that. You understand all these things are driving up prices. Until this issue is fixed, then that's going to be an issue. But also, yeah, construction. The other one is when money was cheaper, you see all the construction was, the people that were good were taken. Like the guys, one of the crews that we use, they told us it'd be 2 months before they could come back and do some other, they finished what I asked them to do, but I had some other things I want them to do. They told us we're booked for 2 months. Do you see that? They're busy. Why? Because there's a lot of deals out there. You understand? So when interest rates raise, EMAC, then if there's less people doing it, then they'll be able to come back and work a regular schedule. Does everybody understand? This is called an economic system that works on an economic cycle. So what the real thing is how we're going to learn how to manage it inside of that. Whether the real estate market is up, whether the real estate market's down, we have to have a strategy. Here, let me show you one more thing. And then, it's okay, then I'm gonna show you guys a little bit of bonus stuff I got, okay? Ouch,
Charlene had a follow-up question. Sherry, you can unmute yourself and ask that when he gets finished with this one point.
Hey, I have more than one point.
I'm sorry, when he finishes this point,
just kidding.
We're gonna make after that.
Sorry, you guys. You ever see that comedian things raunchy? We go like this when someone says your little thing. Hey, come over here. Where's your little job at? I'm like, yeah. Say a little point. Then he's gonna come back to you, Cheryl, and deal with the real issues. All right, just playing. All right, y'all, let's go. All right. Steps you guys need. You guys just some things that help us. And these are all clients. If you're not, and also by the way, if you're not a client, you guys call us, set up a meeting, and we'd love to go over this with you, because what your portfolio should do, what you specifically do, and everything depends on your situation. We had time, we go through testimonies, because I love EMAC to give his, you know what I mean? Like, and everything like this. But because the real answer for your question is, it don't affect you one bit, because you in. You win. So it doesn't affect you one bit. But these are some things that I just want everyone to take. Number one, keep us in the loop of your life changes. Like, in other words, like, hey, certainly, let us know, let us know if your kids move out, move out and go to college. Boom, we gonna rent out the room. Just kidding, no. But just let us know of any change you have, and then also let us know these concerns. You guys see one of the first things I did was I brought up the concerns before you do. So when you're driving down the street, I don't know, the virus infects investments, and say, oh no. Our financial advisor explained this to us. He said this to us 6 months ago. And remember, we talked about this stuff a long time ago. This isn't new. Anything that I brought up today, other than what's going to happen this year. And then also, you guys, I'm going to say this and raising my hand again. Can we make sure all of your legal documents, you guys, we have Annette don't have to hold it up, but we have something called a peace of mind checklist. I'll repeat it again, peace of mind checklist. Can we make sure all of your legal and your financial information is up to date? Like, in other words, please, if you guys have your ex-spouse or anything on your insurance documents, you might want to change them prior to, okay? But if they put you down, don't just stay on there, okay? Just get, all right, everybody. I was just kidding. All right, so that's one of the things that we want to make sure you have all of your documents and everything set up in that area. And then also what we'll do, and then I think you guys already know we already do this. I keep you informed with regular communication. I think you are very well aware of, I send you an email every week about the market, what's going on, what's earnings, and we can put a little recipe in there of food, so you guys can eat right while you're reading it and everything like that. And then this is called Where's George, where we do this every month, and we're doing this. And then last year we added where I kind of go over economics a little bit during that as well, all year round, and update you as we go along. Also on a personal and everything, also I have a show called Separate Life, which is from one of my books. I have a weekly show that gives out all the mechanics of how you build generational wealth, and how you deal in those 4 areas: time, talent, temple, treasure. So we do that, and you guys can also invite your friends to that, because I think you should have friends and family members do well financially, so that they out your pocket. Okay, all right. And then so what we do is we're going to communicate with you. And then 2 is, I know this sounds corny, but I just wanted to say it, is to manage your investments according to your personalized strategies, just that you guys know that. So that's why whenever we meet and we discuss your investments, I am telling you based on the strategy, guess what the strategy is, guys, to achieve your goal. So if you tell us you want to buy out, you tell us you want to do this, you tell us you want to retire, you tell us you want to do that, then that's what we're doing. That's why you ain't worried about what everybody else is doing out the mall. We're worried about what you're doing. Okay. And then, all right. And then stay on top of changes on the market, and make adjustments where necessary. And in that area. So I say that to you. And then I want to tell you the one I think advantage I have is that, advantage we have here is that one is you saw all that research I showed you from all those big wirehouse and everything like that. But I think of just person being in the city, and then just also I'm on the ground looking at stuff too. And that's where a lot of our opportunities have come from, and in these areas. So again, let us know. What you'd like to do. So all clients, if you have any other questions regarding some of these things, write them down also, and I'll answer them when we're talking one-on-one, specifically how we're doing that with your portfolio. Like people are saying, hey, Jordan, I see interest rates, and then I'll explain to you our bond strategy, so that you say, oh, and I'll say, I'll pull up a fund. I'll say, you see this? This is something called, for example, what a floating rate is, because that rate floats. When they change interest rates, it floats. So we'll talk about different strategies that we employ and in doing that. All right. And then also, I think there was a question, everybody, the show is on Tuesdays at 7 p.m. It runs on YouTube, Faithful Central's website, and on Facebook. But then also you can just let us know, and we can send you a link, and also be able to do that. All right. So I'm done making my remarks. I'm done with my little points now, Jeanette. So now we come back to Cheryl Lynn. And then if it's all right, you guys, can I show you guys something in real estate that I think we should really start looking at and doing things like that in that area. An opportunity that though it is missed, I want to use it as an example. All right, Cheryl Lynn.
I can't wait to hear about the real estate because I attempted to send 3 questions yesterday or day before, but I guess they didn't get to you guys. And one had to do with whether real estate was still a good, investment, commercial or residential. But specifically, what Danette was referring to, I was saying is with all this inflation and all these prices that have gone up, lumber, food, everything else, like you said. So I appreciate you explaining that the supply chain thing is really real. I thought that was just some cop out for raising prices. But will the prices really ever go down? Because my husband and I are thinking some of these people, retailers and manufacturers, are just going to keep them up there because they know we're used to them. Should we really expect any of these prices to go down?
Right. So Sherlyn, a couple of things. I think prices can go down, but these are all kind of wait and sees, you know what I mean? And then we have to kind of see. But the supply chain issues are like, I mean, they're real. It's not a cop out. By the way, before I make this next comment, I'm a very nice guy, So I drive my kids to school. I come back and I say, I want to get a iced guava lemonade. I want to get this drink at Starbucks. My wife, Cheryl, I tell you, I was a nice guy. So I ordered the drink at Costco. I'm sorry, at Starbucks. And they say, we don't have any guava juice. So that's like on a Monday, right? I come back on Wednesday. I'm like, hey, I'm going to order something. They said, we don't have any. I said, can I speak to the manager? I said, yeah. Is it you don't have it like you don't have it? She said, no, our supply chain, we don't have it. Like, you understand, like that whole force, like the people working there aren't there. So they're not even, I'm saying it's industry wide. If they're missing guava juice, they're not serving this number of drinks. I mean, it's real. The lumber, I joked with you about the lumber and everything, but you understand, okay, so they have to do that. I'm gonna use solar as an example. So if you order solar panels, there's a group that helps set everything up, right? There's a group that sets everything up. There's a group that come on and install. So let's say there's 10 people that do that. If only 5 of them come to work because of the pandemic and 3 of them quit, 2 of them find another job, there's 2 people there. Then that creates a week delays, right? Then the workers that were supposed to come out on Monday to this one property, there's supposed to be 10 of them. Only 2 people out on this. Someone else found a job somewhere else. Now there's 5 people. It takes them 2 days to do that job. Now you're supposed to be installed on Friday. That pushes it back 2 weeks. Then you don't have to pay for another 2 weeks. You understand that slows down their whole. So that's human resource supply chain and the supply chain of the people. Remember the docks and the drivers and the things. It's creating a backup. So, I'm sorry. Let me just answer the question this way then too. Well, what would have to happen for it to happen? So, Sherlyn, in other words, for your answer to be right, okay, they'd have to have more drivers or have it more efficient. So then back to okay. I'm not plugging nobody, but if they had autonomous vehicles, you see, then there were trucks that were able to drive themselves and doing it, or having a thing, and they would have it, or robots, or if you guys ever been to a Tesla, like it'd be doing it. But I'm not plugging them. I'm just using that as an example because this is also stuff we talked about. Because stuff becomes more efficient. If it becomes more efficient, then the price can drop. For example, there hasn't been any inflation on things that you buy on Amazon, right? Everybody? Everyone that did, when we did the financial fast, I asked everybody to stop doing that. I didn't say for 21 days, I said for 1 day, and then half the people said they couldn't do the fast. Okay, all right, so anyway, we should stop buying on Amazon. So look, if Amazon, if you just order something on Amazon, right? It just is ordered, a button is clicked, it's done by computers, and then it gets put on a thing, and then the Amazon drive, and then it's dropped off at your house. Or you have to get in a car, drive to a mall, they have the lights on, the people there, staff, all the things, and that raises the price. You see what I'm saying? So the system has to go back to being more efficient, and then prices will go down. Because the people that you're paying more for have a model that's more efficient. but it's dependent upon stuff getting given to them at a fair price. So lumber goes down, but see, the lumber costs that's a domino effect on the whole process. Just like, oh, I'm sorry, let's do another one. Okay, hey, Sherlyn, if gas prices go down, that'll solve everything. Not solve everything. That would help. I'm sorry, but FedEx and UPS have gas fuel surcharges. Remember, they raised the fuel surcharges, but when gas goes down, they don't take them off. It's profit. Okay, that's a good question. All right.
Thank you.
No problem. Did I answer all three of them, or you want to wait till I show my little profit?
It may not be.
I'm gonna let it go after that.
It might be little price. It might be little.
Oh, it is little. It is. Wait. It is little. It is
Thank
little.
you.
But it's gonna start little.
I know it's gonna start little.
Okay, go ahead. I'm sorry. Is there any other question?
Jeff Kessler just, commented about utility bills. He says those have also doubled since last year, but the usage is the same. And we won't talk about my utility bill we just got. Oh my God.
Got it. So, so let me talk to you about that three ways. Yes, and then I thought when you asked that question, what about utility bills? I thought that Jeff was going to say, what about utility stocks? Because you see, if they can charge more, because most utilities are regulated. So in that area. But here, let's talk about utilities then. So utilities, then you have to look at, if the people are homeowners, how to mitigate that, meaning that how to take more control of the utility. Like if you're talking about electric and those things, then you have to start looking at solar alternatives. If you're in other states, wind, other things are doing them. But that may be something to look at. But utilities, again, those are costs that you can't control. You can control them to a degree, but I mean, they adjust those prices, so you can try to work with them the best you can by getting some of those things. And then I'm not that familiar with them, but like the Nest or other things where you use different utilities at different times. But the best is solar, because then that's time of use and using those things. But yes, those go up. We'll see if they go down. But then also, Jeff, there's a whole can of worms that's tough to get into in the state of California, because we don't use nuclear power. On your way down to San Diego, those plants have closed. So that makes that a little tougher in this state to be able to guess where they're going to be. So the only real answer I have for you is you gotta try to mitigate it the other ways. Okay. All right. Jeanette, do solar panels really save you money?
We have that same question. Yes. We're going to do a show on that. Yes, on Saturday.
Yeah. So guys, we're going to do a show on that. But let me just explain this to you about solar panels. So they save you power a couple of ways, but I'm going to do a class on this a little bit later. In doing this is that, so if you have a roof on your house, you have a roof on your house and there's a house next door. So when you put solar panels on there, they don't actually sit on the roof, they sit on racks. So your roof doesn't get as hot as if it were the house next door, for that particular reason in that area. So that's one way so let's say it gets to be 100 degrees, it doesn't get 100 degrees on your roof. That's one. Second is heat rises, so you may want to have a solar attic fan to suck the heat out of the attic so it's not as hot. So you have to look at making your home more energy efficient. Now, as to solar. So right now you get solar from you get electrical, you get gas from Southern California, Edison, or Department of Water and Power. And you have something that, like they had that little meter that spin like this. If you have solar, it would spin backwards. So what happens is during the daytime, what you're doing is you're collecting power and then you're sending it back to the system, and then you're using it during the daytime, and you're using it. And then you use it at night. But what's happening now, and I'm sorry, that's called net metering. And I'll go deeper in this at a later time. But what's happening now is that people are home now more than they used to be, So now their power bill is higher because you're home during the daytime. People used to go to work between the hours of 9 and 5 typically. But now that you're at home, whether you have solar or not, your energy, so say you don't, your energy bill is higher. If you have solar, that means that it's just knocking down the bill that you'd already have. Because I guess, Danette, you're alluding to the fact that you're getting a higher bill now. It's because people are at home using power.
They build
and they're doing it. I'm sorry, what'd you say?
They billed us annual. It was like a surprise. Here's the annual bill.
Oh, okay, gotcha. Okay, gotcha. Again, everybody, I'm trying to move on, but she's asking me these little questions, so I'm answering. So if you have an annual bill and you didn't know, they're actually sending you notices during the year. So let's say your bill, gotcha. Okay, gotcha. Then we'll have to talk about that, or it's available online. But what happens is this: can I just use, if your bill would have been $300 a month and now it's $100 a month, and you got a bill for $1,200, that means that you want to send them $100 a month now, so that you don't have a $1,200 bill. To the people who does solar work, yes, solar does work. And also California, I don't know, this state is one where it completely makes sense. Power is not as expensive. If I lived in Minnesota, I'm just using Minnesota because that's where my dad, I looked at what they charge, what's called a kilowatt hour. It's so inexpensive, I wouldn't get solar there. So it depends on where you live, okay? All right, so here, let me jump in here, you guys. I want to show you guys something. Then what I want to do is I want to, and then I'm going to give everyone an opportunity. I'll stick around a little bit afterwards, but I would like to just kind of show you something about real estate, and then let's have a talk about it. And Danette, if you could come off of mute, you're not on mute, just make sure I'm hitting these correctly. So you guys, there's a property that sold in Inglewood that listed for $499,000. I'm sorry, everyone, one quick last California disclaimer. When I go over these prices, these are California prices. I know if you live in some other states, you're gonna think that this is crazy, but actually this is not crazy in California, okay? So a property, you guys, I said about 10 years ago, 12 years ago, like buy properties in Inglewood or buy them and then fix them up and work on them. Secondly, I told you buy houses that are, what did I say, Elaine? Ugly and ugly, I said ugly a few times, but buy the smallest house on the biggest lot and then do that, okay? So I just wanted to show this to you real quick. This is just, by the way, it's just on realtor.com. Okay, this house is $499. So I'd say $500,000 for the sake of argument. So I just wanted to think, 2-bedroom, 1 bath, 1,000 square foot home, 1,097 on a 6,400 square foot lot. Okay, I went to go visit this house a few times since then. So now, first of all, this house should have been purchased just based on this 6,000 square foot lot, $500,000 should have been purchased. Okay. Now I just want to walk through this house with just really, really quickly. And I'm going to do a longer show on this board. Do you guys see how ugly this carpet is? And then I'm going to click on this. Oh my gosh, is that better? Is that better than that? Now everybody sees this carpet. Now, instead of telling you this carpet's dirty, I just wanted you guys to know, see here, here, and here, those are the only clean spots in this whole carpet, okay? So if you have the money to renovate it, then you're gonna blow this out and make this and move this and make this a whole open concept and put a fireplace right here. Do you guys see this area? This would totally remove this, and you're gonna run. This wouldn't be here, and this would all be open, and especially the ceiling fan. There'd be a fireplace right here. I'm walking through this very quickly with you guys, okay? You see where the fireplace would be? And you see how open this would be? Now, everybody, you ready for the kitchen? You ready for the kitchen? Boom. So now this whole kitchen needs to be renovated. I actually would knock this down and put the stove. I would probably put the refrigerator here and move it over the stove over here. But anyway, I'd redo this whole thing. See this open area back here? This is a pantry. I would actually start adding rooms back here. Okay. Breakfast nook. You guys see the ceiling? I don't know if they were cooking in there, but anyway, and this wallpaper is actually so ugly. I would actually keep it just on GP. Just kidding. I guess this is so dirty. I guess someone was sitting here. But you guys is it, first of all, who here thinks this is so bad I would walk out of this? Do you guys see how open and nice this area is if you just totally redid this? Okay. This is a bedroom. They must have had dogs and cats, huh? This ceiling fan's got 1943 written all over it. Bathroom. Black tile. I'd totally redo this. But you guys know those real nice pedestal and everything like that? Remove this, run that shower. Rainforest. Anybody see? Does everybody see that? You can do thumbs up, thumbs down, say, no, I don't like that. Okay. I'm done with the house. Okay. Is everybody ready? Now let me show you the value of this. Y'all see this garage? Let's look at it a little closer. I'm going to stop right here just for 30 seconds and just explain something to you. You guys understand what should be done here. You guys can type in the chat right now. So the first thing that should be done is that if you open that garage door, you know that thing's going to tip over, right? This should be knocked down and they should build a duplex back here, a 3-bedroom, 2-bath, 2 of them. You guys see this yet? Then it'll sit out here. This should be, you guys know how they run that brick and then they put AstroTurf in between it? And that should be parking / basketball court. Anybody see that? So let me give you some numbers. I think it costs about $150,000 or more. I'm sorry, and on the Danette, you can jump in here. $150,000 to renovate it. If you don't have the money to renovate it, remove all the floors and just renovate it a little bit at a time. I think this would cost between $350,000 and $400,000. After this property worth about 1.7. This property would be worth at least. Danette, what do you think pricing wise?
Oh, on the one in the front or the duplex project you just throw in too?
Let's start with the one in the front, and then I'm going to look through my pictures and show you something else. Yes.
And where is this property again?
This property is Inglewood. It is right next to La Brea over there by the karate studio. There's a bike shop. What else is that? Bayou Food and I'm sorry, in between Santanella and Slauson. Across the street is Ladera.
Oh, okay. So yeah, we're probably looking at least, I'm being kind and saying 9, but you probably can go 1 million or so.
Just on the house, you're saying on the house, fixing up the house.
On the house, yeah, by itself, not with that duplex ADU project you just talked about.
Gotcha. And then if we do the ADU project, then what do you think?
Well, now you're looking at, you said 2 units, so just consider that. Yeah, okay. So you're just going to add the same amount for each one of those units.
Right.
Because you said 3-bedroom, 2-bath, so.
Right. So everybody, I'm going to just be conservative and say at least 1.7, but I wouldn't sell it. I would rent it because everyone's looking at having them together and everything. And then showing it, okay? So does everybody see that? I'm just gonna show you one more thing, and then I'm gonna
1.7. Ladera is going for 1.7 for a single family.
This is from my camera. I went there and shot this picture. See that February 9th, I was there the other day. You guys understand where this is from looking at the street? Like this is La Brea right here, okay? Now this property, oh, this is the one next door. And look at this, did anybody see the sign? It says, look, no more showings. I went there and a little cat was staring at me.
There's the cat.
I went up it. Calico cat. This is the one next door. Now hold on. This is the house. You guys, I was thinking about knocking this down and making two duplex. Guys, there's a housing shortage here in California. And I would do this, but these look so kind of, I don't want to say cute. I don't know if they're using the roof right, the ceiling right in this place. I'd have to look at how they're going to do that. But and they're doing this. Then I'm going to answer questions, but I'm going to show you guys one more thing. Then I walk down to the next house. Why is this not showing me? I got one more real quick. You guys, this house is 4 houses away. Do you see this one? Fully renovated. I was going to go up a little further, but I'm trying to respect people's property. Fully renovated. This appraised for over $1 million, and this is 1 unit. You see how they built the house? See, this was the same. They had this roof coming over the top. I would have put solar on the back and then put solar up here and then charge for power. Everyone, I would like to say this, and then I'll rest my case, is this. This is what I'm talking about is, you see, that wasn't a deal, $500,000 for that. You'd have to renovate it, fix it, and then that's the deal. Because if that would have been renovated, you could have walked away with hundreds of thousands of dollars. But I wouldn't do that. I would just have the income from that. Does that make sense to everybody? This is a real live example. That's on, everybody can type in chat, it's on Fairview. Does everybody understand that? La Brea, okay. Slauson, La Cienega. What is the street? 64th and then Fairview. Now, everyone, before everyone gets up and drives down there today, those are already pending. Otherwise, I would have got. I was busy. It's already it's already sold, but you can't get this one. But I'm saying, in order to get these properties, some things we need to do. Number one is be approved for our property, and then us have talked to you and find out this is something that you want to do, and then have the resources to do that, so we can set that down as a goal. So we do something inside of our, in our finance planner firm is called Real Estate Roundtable and everything like that. Everybody, and I have shown them to you, okay? To new people. Julianne or you guys staff help me out when I've done them before. I sent out an email last year and I said, everyone, there's a property, and it was right next to SoFi Stadium. And it was there's a development, it's right next to SoFi Stadium. I said, I'm gonna rent out a house. And I wanna show you guys how I rent it and how I show people and how I do it. And I let everybody come over and I showed all the changes that I made to the property. Like, in other words, all the quartz was gray. And they were saying, why is it gray? Because I don't know if I'm renting to a man or a woman. And this is very durable. That I showed you that. Then I took you to off of La Cienega, which that property is being rented today. I took you over to that property too. And I said, I'm gonna show you guys how we rent these. So I keep showing you live examples. And the difference between what I'm doing and these other, I'm sorry, not talking about other people. What I want to do is model to you, like show you, like this is a real live thing. You know what I mean? Those pictures that you guys saw were from this phone right here. You know what I mean? That wasn't like something I read in a book. So I want to make sure that you guys avail yourselves of that. If you guys are interested in that, let us know so we can do Real Estate Roundtable. You guys can come and get them, whether it's that or in other states. Like, we can start having a plan to do these things, because now that interest rates may rise, or this thing may happen, it may create it may create an opportunity. Maybe there'll be less competitors in doing that. Okay, so let us know if you'd like to do that. All right. So that's all I have. Danette, is there any other questions that we want to answer?
Not that I have in front of me. If you did email questions and we haven't responded to those yet, we will get to those during the week. And that would be it. We only have about 10 more minutes before our time for you.
Gotcha. So also, you guys, in doing that, is just is that we can answer them when we have our meeting, clients. If someone has a question and we're currently not working, we need to invite you in. And then what we do is and I would say I guess during the pandemic, do we have a meeting where we look at where you're at and what your goals are, and then we help you achieve those goals. And our first meeting is absolutely free, and we just want to find out how we can work with you and in doing that. So you set up an appointment. If Julianne could put that in the chat, we'll put that information in there available for you. But you go to thompsonwm.com. That's our website. There's information like that. And I have a personal website as well. GeorgePThompson.com has all that information. All right. Other than that, that's all that I have.